Good morning. You're welcome to today's episode of the Market Snapshot. Those who are joining us from Kampala, if you're joining us from Kenya, from Nairobi, and all over, from anywhere else in the world, you're most welcome. Yes, sorry, I was just sorting something out. We can begin. Yeah, so the markets have been fairly great, given the fact that we've been having quite a number of catalysts. Some, of course, have come from the previous week, where we've had really some great speakers from the FOMC of the Federal Open Market Committee. We've also had some data that has been coming in from Powell. Of course, hinting on the possibility of the end of the rate hike cycle. But of course, we are also going to hear from Powell today. That's going to be at about 3:30. We'll check that out on the economic calendar. Okay, so I want to start it off just by mentioning something that came out yesterday. The reason why we've been seeing a very, very big sale on gold, and of course, as of yesterday, was simply because of Biden. US President Biden came out and said that that they should have a technical pause on the fighting in Gaza. And of course, I suspect that's the reason why the risk-on sentiment has really decelerated. The risk-on sentiment has really persisted. We are seeing a lot of rallying coming in for the indices. We also saw that rallying coming in also for some of the other risk-on assets like the pound dollar and the euro dollar. And of course, I'm thinking this is going to, create a lot of, downside potentially for gold. And of course, what the US is indicating, and of course, what we are seeing from Israel is that they are not looking for a ceasefire, but they are calling it some sort of pause in the fighting, which kind of is tricky for us to determine really where this war is going. I mean, do they want the war to come to an end, or do they want the pause to essentially mean that the fighting would continue? But I suspect that could be one of the reasons why we are seeing gold selling the way it has been selling from Monday into Tuesday, and also a bit of Wednesday. We are seeing gold, having presenting signs of downside. So first we have to wait and see what's going to come out of that. Now today at 3:30, we are going to have a speaker that's from the Federal Reserve. That is the FOMC chair, who is Powell. And of course, the latest that we have been getting from the FOMC is that they have, much as the markets had gotten ahead of themselves, and we are seeing a lot of writing on the articles online about the possibility for the end of the tightening cycle. But Kashkari, who is one of the members of the FOMC, indicated yesterday that the Fed could potentially consider hiking if they deem so. And of course, now that has now woken up the markets to the fact that, the rate hikes might not be at the end, and we could potentially be getting a rate hike. Now, the other thing that, of course, might be also important is the Fed is going to remain data dependent. And I'm thinking the CPI that we're going to get next week is going to really provide us some guidance on where the Fed could go. So as of this morning, we have some data that has come out. I'm sure most of you have been seeing how the oil prices have been, declining. The reason for that is because there has been a build-up in the crude oil stocks. And I'm thinking also, when you check on the US crude oil strategic petroleum reserves here, you'll be able to notice that there has actually been some kind of increment over the past 3 months. And I'm thinking that could be one of the reasons why we are seeing the oil prices going back below $80. Now, the other thing that's also important is the Russia and Saudi Arabia that had indicated Russia and Saudi Arabia had indicated that they are going to, reduce their supply throughout the rest of 2023 and also potentially towards 2024. But that seems not to have happened. And despite such efforts by those two members of the OPEC, the supply has been building up quite tremendously, which of course has put a lot of downside pressure on the oil prices. So today morning at 1 a.m., we got some data coming out for the API weekly crude oil stock, which increased from 1.3 million barrels to about 11.9 million barrels, which of course presents some upside, some downside there for oil. So going into the Euro session, we got some fresh data coming out on German CPI. And there seems to be a trend of disinflation that we are seeing all of, across the globe, whether it is Kenya, whether it's Uganda, we are seeing a trend of disinflation, and the inflation has been declining. And it's likely that, of course, the inflation has been strongly anchored, and we're expecting it to continue declining. So we're having, this decline for CPI here for year over year. Germany came in lower from 4.5, came in at 3.8%. We also saw German CPI, month over month, also declining from 0.3 to 0.0. So of course, the Euro USD, as we'll check out when you go to the charts, we shall see that also is providing some downside momentum for the euro and for the euro against the dollar. So going into US session, we have a bit of data coming out, and of course, the major focus for today is going to be Fed Chair Powell. So Fed Chair Powell most probably is not going to mention anything new. Aside from what he mentioned in the previous FOMC conference, he indicated that the inflation longer term target is 2%, and that they are still seeing it progressively getting to 2%. But of course, the other thing is that he's indicating that the financial conditions seem restrictive enough. And of course, I'm thinking that could be one of the reasons where we saw the market possibly thinking that the Fed might, not hike beyond where they've already hiked. So if we get any indications from Powell, on terms of maybe the path, the policy path, but also possibly some indications on whether the tightening cycle might be towards the end or not, that will provide a lot of direction to the market. As of now, the market seems to be stuck in some kind of confusion, whether it's not sure how to proceed further. And I'm thinking Powell is going to break that deadlock, and allow us to see what could possibly happen later. So before we go to the charts, I want to just go through a few guidance here from some of the big banks. I'm going to start with HSBC. So HSBC released some indication here. They indicated that the pound sterling is a sell, and of course some of the guidance that they are giving from there. We got this article coming out from Sam Coventry, and HSBC was providing some guidance to the pound sterling. So they are saying here that the foreign exchange strategies at HSBC are sellers of the British pound because the recent interest rate developments leave the currency looking overpriced, while economic headwinds limit its attractiveness. US interest rate expectations fell last Friday following the release of the US labor market data that printed softer than the market was expecting. This weighed on US bond yields. So US bond yields have been performing fairly strongly as of yesterday, and I suspect that could be one of the underpinning what's underpinning the weakness in the pound, especially against the dollar. And I'm thinking broadly, we should see some weakness coming in for the pound. Of course, the future expectations for economic data has been that the economy might weaken. So of course, if we see otherwise, then that of course will, provide some strength possibly for the pound as we proceed. So crossing over to the euro, the euro, of course, as I've just shown you earlier, we are seeing some fairly strong decline on the euro, and of course, from Monday to today, that's simply because of the increase in the bond yields. But we're also seeing that the euro has stalled on its rally simply because the economic data is not really looking great. We can see that on all fronts there has been a slump on data. CPI of this morning came out lower. We're also seeing that the CPI also that the industrial production that we got from Germany was not looking that great. So generally, we are seeing some kinds of signs of stagflation, where also GDP that came out from the Eurozone was weak. So I'm thinking that is really going to stop any kind of rallying for the euro. And of course, if we get stronger data, that will support a higher euro. So those of you that are trading euro USD or pound USD, take note that the US economy has been resilient. Some of course have been calling it some sort of Goldilocks situation. Goldilocks is where you have two of if you have like inflation declining, and then you have strong GDP, but then of course on the other flip side you have you have a situation where you have the labor market strong. So you're not really having weak. We don't have that instance where like we were when we were in COVID. If you recall COVID, when we were in COVID, every single lagging indicator was pointing towards a weak economy, okay? Whether it is inflation, whether it is the GDP, industrial production, CPI, all of those metrics, were weakening, but it's different now in this case. So I want us to go through the charts. We are going to start with the NASDAQ. So the NASDAQ, I just want to look at it. We're going to do some kind of like top to bottom on it, where we shall start with the higher time frames, and then we shall wind up with the H1. So for the NASDAQ has been under an 8-day rally, as you can see here. And of course, the reason why I'm showing us the daily is simply to show you that the 200-day moving average there's a very big gap between a 50-day and a 200-day moving average, which is a very strong indication for a buy. And NASDAQ has been rallying for the past 8 days. Every single daily candle that we have been printing on NASDAQ has been, fairly strong. And you can see that the bulls have actually been quite in charge there. So I'm thinking this distance between a 50-day and the 200-day moving average could possibly indicate to us a possibility for a higher move there. So if you go on the lower time frame, which is the H1, you'll also notice that, just a moment. So on the H1, we have a double top which has formed. So this double top could possibly indicate that the rally for the NASDAQ has stalled, and we could see it moving lower to this area here of supply. That could now provide us a possibility for some downside move. Now, for now, the NASDAQ seems to be holding quite strongly around here, and I'm expecting that if we get indications from Powell that could provide some hawkishness and some rally from the US bond yields this evening, then we are going to see a decline coming in for the NASDAQ, because this rally that it's been on, I think, seems to be coming to some kind of a pause, which will allow NASDAQ to move lower and possibly allow it to test some new levels there. Now, when I cross over to Euro USD, Euro USD on the daily has formed some sort of a bearish flag, and we are seeing that the upper part of the bearish flag is somewhere around here. If I'm to just zoom in here, you'll be able to see it clearly. So this is Euro USD for you, okay? It has formed a bearish flag, and the top part of this bearish flag was achieved sometime on Monday, where we saw it moving lower by almost this is about 70 pips. So I'm thinking for now, what is possible for Euro is that we could see a fully blown decline all the way back to here, to this level here, which is a move from the current prices, is a move of about 70 pips. So this is possible today. And of course, if we break here, we are going to get a continuation of that decline for Euro USD. Now, we also saw that on Euro USD, this level that it achieved, there was not enough momentum for it there, and there was a very big liquidity sweep that took it down by over 40 pips. So I'm thinking, especially if you go on the H1, you'll be able to see that that level was not held quite well. And we're right now, we're seeing Euro USD, is potentially moving towards a decline. Now, the other reason for this move here would be that the DXY has also mounted a rally. Yesterday, of course, if you listen to the snapshot of yesterday, Rufus indicated to you that the DXY could potentially, come up with a strong rally. That, of course, will dent any euro upside. Now, if you recall well, I showed you from this statement here, where we saw that some of the banks are still having a short bets on the euro against the dollar, and the reason for that is because there are some loosening financial conditions over there, and the economic data over in the eurozone has still not warranted higher valuation for the euro. So if you're trading the euro, keep monitoring these zones. If we get these levels here failing to break, then we could potentially see the euro moving lower and, testing these levels down here. So crossing over to the pound, pound dollar, I think is somewhere this side here. So now for the pound dollar, it failed to break this zone around here. And of course, this was on Monday. And the reason for that was simply because there was some weakness there. And knowing that some of the banks have stayed net bearish on the pound, this is going to really affect any upside for it. So I'm thinking we could potentially see the pound moving lower back to these levels here, where we have this block here. So this block here was where we had a lot of liquidity sweeps, and these sweeps held for quite some time. From the 2nd of October up to now, this month that we're in of November, the pound has failed to manage to break below this zone here. So I'm thinking the next order flow that we're going to have for the pound could potentially push it down to this zone. And if you manage to break here, then we're going to have the pound visiting new levels. So when you go back to the daily, on a daily time frame, you notice that the liquidity sweeps are actually quite many around this area. And this is a very, very key area for any progress for the pound. So if it retests this level, then we could see the pound potentially breaking lower. Now, I'm thinking today, since we have Powell at 5:15, any indications from Powell that the rate hikes have not come to an end, and the Fed is ready to act in case of making conditions more restrictive, we could potentially see it moving higher, rather lower, and back to this zone here. So let me quickly go to the Dow. So when we go to the Dow, we shall go on the daily so that we can see what is happening there. So the Dow has also attempted to have a very strong rally, just like the Nasdaq. The only issue, though, that we are seeing with it is that this rally could potentially stall. Now, one of the reasons why the rally for the Dow could stall is because what has been allowing the Dow to rally has simply been indications for an end of the rate hike cycle. Now, if we get guidance from Powell that they are going to stay attentive to conditions and data dependent, and of course, if they do not hint on any tightening, future tightening, the Dow could potentially print another higher level, which could be somewhere around here. Now, if you notice, we are still on a decline, okay? From earlier in the year, the Dow is still on a decline. And if we manage to break this key descending trend line here, the Dow is going to attempt to create a new high, which could see it potentially move higher into December. Now, this might not be possible in November. The other thing that I also need to bring to your attention is on the 17th of November, we have a potential government shutdown for the US. Now, it seems that there is nothing yet in the media and in the you know, that the narrative right now is still not talking about this potential government shutdown. Now, the government shutdown is likely to happen next on the 17th, and the short-term funding for it is going to expire here. So until the Congress comes up with a plan, it's really, really hard to tell how farther up the Dow can move. Same thing also for the Nasdaq. There could be some stalling on that rally. And of course, if that rally stalls, then what we could potentially have is a situation like this. You know, and we could then have a higher low, which is going to be printed somewhere around here. Okay. So that higher low, then of course will now warrant a move back higher that would allow us now to break this zone. So for now, I'm thinking we could potentially see Dow moving higher, especially back to this level here, that could now allow it to then, you know, stall possibly towards the US government shutdown. That is around the 17th of November. So now going over to gold, which I know is an interest for most of us. So when you go over to gold, as of now, gold had two big bearish flags it created. Okay. So the first one it created it around here, which was this area of price action between 18th of October up to somewhere around here where we had the NFP, which was around the 31st of October, rather around the 3rd of November. So you notice that since we got that announcement from Biden, which was yesterday, gold has been on a downward trajectory and it has sold quite tremendously. This slump that we saw on gold that ended at around 1957 was a sell of around 300 pips. And I'm thinking gold might attempt to create a higher high here today, which could then enable it to sell. Now, if Biden is super hawkish in this meeting today, gold might go through a very, very heavy selling that could allow it to sell all the way down here. Now, the other thing I need to mention is Biden and Netanyahu indicated that their technical pause for the fighting in Gaza is going to last for 3 days. Okay. So it's going to be 3 days. So after 3 days, we are going to get an update on that technical pause. The further and further we get an extension of a pause, okay, in fighting from Gaza is going to weaken gold much further, and that could allow it to retest these levels down here. So if we manage to break where you're seeing this bold level here, gold is going to start going through some heavy selling that could allow it to test lower points. Now, when we go on the daily, we still have the 50-day moving average fairly above the 200-day moving average until we get a nice cross of these two moving averages to the downside. Then gold is going to stay fairly bullish. So for now, yes, we are seeing some kind of a pullback, but that still has not warranted a fully blown sell for gold. And if you're looking for swings on it, keep that in mind, that it's still skewed towards you know, a bearish move. Now, I want to quickly go to silver. So for silver, I want to focus on silver on the daily. So when you go on the daily for silver, you can see that the 200-day moving average has stayed fairly above the 50-day moving average, despite silver still stuck in this deadlock of price action. Okay, so this simply means that silver has actually been a sell for quite some time now. Okay, and I know a lot of people that might have been trading silver must have noticed that it has actually been ranging quite strongly. But if you're trading it, the directional bias for it is actually a sell. Okay, and the reason for that is simply because the bias. The reason for that is simply because the net short positions for silver are actually drying up. And that is simply because the war fears have receded quite tremendously. So I'm thinking for silver, we could see a move like this possibly that could take us down here, back to this level here. And of course, much as silver may not have bearish flags like gold has had, that 200-day moving average staying fairly above the 50-day is a simple indication that the directional bias is still a sell, and traders should be looking for sales on this particular asset. So let me quickly go to oil. So if you've been trading oil, you've noticed that oil has been fairly weakening. We have been having such a structure on oil, something like this. At every single zone, we've been having a break of structure. Okay, we've had it here, we've had it here, we've had it here. The latest one we had was here, and I'm thinking even now we should see oil continuing to weaken. Now, the major catalyst for any weakness in oil has been premised on the building up of the reserves by the US. And that's one of the reasons why oil is selling like this. Now, the other, of course, thing that might not be important for trading purposes is that whenever oil usually goes under intense selling like this, it normally points towards a potential recession. Okay, so I do not know whether a recession might play out in the US or globally, but usually when oil prices sell like that, it points to a recession. And the reason for that is because when we have lower oil prices, it's just simply telling you that there isn't that much demand. So picture at a situation where demand is not there. When demand is not there for oil, when people are not going to fuel their cars, what does that mean? That could mean also that the spending the spending power for the households, for businesses has taken a bit of a slump, and that could be one of the reasons why we are seeing this. So the decline for oil also comes at the time when we are seeing that we're having a situation of disinflation. Inflation has been, declining quite strongly across some of these economies, and I'm thinking that could, provide some downside for oil, and we should see it retesting some of these levels that it was at earlier in the year. Okay, we're going to wind up the analysis with GBP/JPY. So GBP/JPY has been stuck in a deadlock for quite some time, from July all the way up to November. We are still not seeing some potential for direction on this particular currency pair. And I think the reason for that might be that the guidance that we are having from the Bank of Japan is still very vague. They tweaked their policy a bit, where they say that they are going to adjust the reference rate for their bond yields for it to trade above 1%. But that has not, really allowed the JPY to sell. And I'm seeing that there's still some potential for an upside move here. So for now, the last liquidity sweep we had was where we're having this box here. So if I zoom in, you'll be able to see it, So where we had this box right here was the last liquidity sweep we had for GBP/JPY. And ever since then, it's been on an upside move. So I'm thinking if we manage to break above this descending trend line, then we should see some buying coming in for GBP/JPY. That could take it, much, much higher than it's trading at right now. Awesome. So I hope that helps. If you have any questions whatsoever, please type them in the comment section so that I can handle them as we come to the end of our snapshot. Okay. So let's just look at the questions here. Hello, Malombe, you're saying hello. Hi, Malombe, how are you doing? I hope you're having an amazing time. Joseph Gichari, hello, Norbert, how are you doing in Kampala? Kampala is doing fine. I hope you're doing awesome wherever you're joining us from. Okay, Malombe, I think that was earlier saying I can't see or hear anything. Okay, fine. I think that was sorted. I'm sure now you're able to hear me. Wendy, you're saying, have you started your presentation, sir? Okay, yes, that one is okay. Morning, Caspar. I hope you're doing great. Let's see. Robert, I hope you're doing awesome. Wendy, you're saying, I hope Ministry of Energy in Kenya has noted oil prices dropping. Okay, yes, I hope they have. I don't know what's happening over there, but over in Uganda, what's happening is we are going to get some kind of where we could see our fuel prices reducing gradually, simply because the government of Uganda has decided not to use middlemen for the for importing of oil, and it's going to be able to get this oil, from right from the sources at lower prices. So, and of course, the latest that we had on that was that President Museveni was to meet President Ruto to discuss that, and I'm thinking hopefully maybe into next year we should see some decline there coming in for the what? For the oil prices. Okay. So Joseph Gichari, you're saying, uh, talking on Nasdaq, look, the swing highs. Talking on Nasdaq, look, the swing highs it broke. Okay, talking on Nasdaq, look, the swing highs it broke the upper trend line. Can you wait for a retest? Uh, Retest and rejection, then we trade higher. As you wait for, okay, talking on Nasdaq, look, the swing highs, it broke the upper trend line. Can you wait for a retest and rejection and we trade higher? Yes. So Nasdaq, of course, when you look at it on the H1 time frame, okay, you'll be able to notice there that the reason why we're having the reason why we're having it here is because we could potentially see it breaking up here. And of course, if you go on the daily, you'll also notice that you'll also notice here that one of the reasons why we are having that strong rally is because the demand for most of these stocks is quite strong. We have also been getting some indications for stock buybacks. So the reason for that is simply because some of these companies want to price, they want to get the value of their stock up there, and they are putting aside some money from their excess cash, to do those stock buybacks. So I'm thinking that is going to support Nasdaq, but we need to get a retest here. If you get a retest here, then we're going to break above and move up higher. Now, the other thing, of course, is that of course, usually normal, or also I would say like healthy price action is not that we have pricing moving up all the way without any pullback. So the pullback might come today, or maybe likely later in the week, and of course that is really going to depend on the guidance you get from Powell. So we have to wait for that from Powell. Awesome. So let's proceed. Wendy, you're saying the problem with the US, they are not transparent and honest about their oil reserves count. They should have pretty much enough despite the ongoing war. Yes, yeah. So yeah, we are seeing a fairly big buildup in that strategic petroleum reserve. So if you go to Y charts, you'll be able to see that. You can see that over the past 3 months, there's been some bit of a build up in that oil in reserves, in the reserve stocks. And of course also the data we got today morning at 1 a.m. we saw that there was also some data that came out higher, where we saw that the weekly crude oil stock counts increased by almost 10 million barrels, which of course is an indication of a build up in those values. Awesome. Okay. So what would happen if we went into a recession? Of course, it's really tricky to answer that question. But what I can say is that usually the conditions for a recession you'll find normally a very steep decline in pricing for most of the consumer goods. You'll find a lot of them. You'll find the pricing will be really, really low. And usually during a recession, you find that companies are closing down. You find that there will be retrenchments. you'll find for traders, I would say you can really benefit a lot during a recession because there's a lot of price action for you. But usually for us, as households or, as individuals in our countries, usually you'll find, retrenchments, prices really skid much quickly lower. You find also that the pricing really for most consumer goods normally will be low. And of course, that's usually what happens during a recession. But of course, usually for a recession, you'd find that all those lagging indicators, whether it is inflation, whether it is GDP, normally you'd find all of them pointing towards some sort of weakness. Yeah. So Brian, you're saying USD CHF, kindly. So I don't know whether I have USD CHF open here, but I'm thinking it should be undergoing some strength, and that could potentially be because of of the DXY waking up. So I'm thinking if we continue to see some strength there for the DXY, then we should see a higher print for USD CHF. But there seems to be a lot of liquidity sweeps here that we are having. And of course, the more we get them, the more we could see some choppy price action there. But for now, I seem to be looking at some kind of an ascending triangle here on USD CHF. Something like this. Okay, so if we get a move higher, then that could allow pricing to potentially move much higher there. So for USD CHF, just keep observing the DXY. Yeah, just keep observing DXY. If we continue to get some higher movements in the DXY, then we could see a break of this ascending triangle, potentially taking us higher. But of course, one of the major catalysts for any movements today on this particular currency pair is going to be Powell's speech. Any new comments from Powell is going to really provide a direction for this one. But for now, I would maintain a bullish bias on it as my directional bias, especially on the H1. On the higher time frames, of course, what we are seeing is some sort of weakness there because the 200-day is fairly above here. But of course, today, if we get indications from Powell that they're going to stay, keep the financial conditions restrictive, and of course, indicate on potential higher, rates, then we should see some strengthening there. Yeah, Rufus, you're saying, why is the UGX strengthening over the KES? Yeah, I think there are many reasons for this. One of them, of course, could be less inflows of the UGX into the country. The other one could also be that we're getting big some different sectors where we are having dealers or traders trading in the Kenya currency. Of course, if we're having a lot of Ugandans here dealing more with Kenyans, or businesses, if their businesses are performing well, then that could also explain why we are having that uptick in the UGX. Yeah, but there are several factors to point to that. Some of them could be on some of the liquidity operations that are taking place by the central banks. If we have a situation where where we're having a Bank of Uganda, trying to cut down on a liquidity for the Ghana shilling to allow maybe those who are exporting to benefit, or importing, that could also allow the UGX to potentially strengthen. So we have to keep observing, and I'm thinking some of those different parameters for any upside or downside on the currency potentially would be premised for inflows, outflows of those particular currencies, and any operations by the different banks in the open market, and of course with the tools that they use for their monetary policy. Yeah. However, I'm yet to see how steep that strengthening is. If it's fairly strong, then there could be some underlying factors that could be pointing to a broader upside in the UGX, over the KES. Yeah. Awesome. So I think that's it for today. I wish you all an amazing day. Don't forget to trade safe, guys. And of course, the other thing I need to mention is the big catalyst for any movement today is going to be Powell's speech later today at 5:15, which is going to provide a lot of potential moves there for us. So make sure you keep track of that. Awesome, guys. Just Emma, you're asking about UT100. I'll ask you to rewatch the snapshot so that you're able to get guidance from there. Yeah. That's it, guys. I wish you all an amazing time and happy trading. Cheers.